Hi, Erin Johnson here, Outstanding Ohio's most resourceful realtor. I'm here today with another Resourceful Realtor Thursday, helping you with all things home ownership. Today's topic is appraisal gaps and appraisal bridges. So there are some instances in this market, because it's a hot seller's market, and houses are going above asking price, that when the appraisal comes through, it comes in lower than the offer or the purchase price. And if that happens when there's a loan involved, the bank will not loan the buyer that amount of money. They'll only loan up to the value of the appraisal, and they won't loan 100% of that value typically because they want you to have still a down payment, what's called the loan to value ratio, the amount of loan you're taking versus the value of the house. Can't be 100% typically. Usually, it's if you're getting a conventional loan, it's probably 95% or less. So, I'm going to walk through an example, kind of old school teacher style here to really help explain this. It's easier if we look at the numbers. So, let's say that the asking price of a house is $275,000 and you offer for the purchase price 300. It was competitive. You had to go over ask to get it, so you said, I'll pay 300. I'm willing to pay 300. And maybe you're planning your down payment to be 20%, which would be $60,000. So the loan amount, the amount that the bank is planning to loan you, would be 240, which would give you an 80% loan to value ratio. Okay, so that's your plan, and everything seems good until the appraisal comes back at, let's just say it comes back at 280. Okay, so now we have this gap in between what the appraisal is saying it's worth, and the price you said you would pay. We've got this $20,000 appraisal gap, right? And in that instance, like one of four things needs to happen. Either the seller has to reduce the amount to the 280 so that they're aligned. The buyer has to come to the closing table with an additional $20,000 in cash because the bank's not going to loan them more than the 280. Or they do some kind of negotiation to meet in the middle. Maybe they say, okay, we'll change it to 290. You come with 10,000 in cash, we'll accept 10,000 less. Or if you can't come to terms, the buyer might need to walk away. But if you do, in this scenario, if you were fortunate enough to have 20% that you were planning to put towards a down payment, what you can do is you can take some of that money away from the down payment and put it towards the gap. So we could say that we've got the 300 that you're going to put $20,000 in cash towards the gap. So the um, so the loan value, if you will, is 280. And then you're going to take the remainder, the $40,000 remainder as your down payment, so that the actual loan would be 240, which would give you still a what is that, an 86% LTV. Sorry, my writing's not the greatest. Okay, so there's still a way to make that work. The one thing you need to be aware of is when you drop below that or above 80% LTV, you're going to have to pay PMI at least until it gets back down to 80%. And if you're selling and maybe waiting for some proceeds, you might be able to recast and make that go away faster. So that is one scenario of how this could come into play. If you know going up front that you are offering over asking price and there might be a risk that it doesn't appraise, we've seen buyers offering a bridge. It's basically offering and saying, we do have some cash that we're willing to put towards this gap if there is one, and this is the amount we're willing to go up to. And that can help buyers get the deal, because if they're comparing, we have three offers at 300,000 and one of them's offering a $20,000 bridge for the appraisal, that's more attractive than the one that doesn't offer anything. So something to think about is if this is your scenario, and let's say you do have this $60,000 in cash, you could perhaps say that you could cover up to $40,000, maybe even $45,000, and still end up with a 5% down payment. and be able to cover that bridge. If you're willing to, just know that you're basically saying, I'm agreeing to pay more than what somebody is saying this is worth. Hopefully prices go up and you're not going to end up underwater on this thing, but you do need to be aware that there is some risk, and that is why the bank won't loan you the amount. So I hope that helps. I know it's kind of confusing, but basically the gap happens when the appraisal comes in lower than the purchase price, and that is not going to fly with the lender. So you have to have some way to what's called bridge that gap, which usually in this market ends up being the buyer having to come up with some cash. And if you know up front that you have that cash, it's a good idea to let the sellers know when you're writing the offer that you're willing to bridge that gap up to a certain amount, and that may help you win the offer. If you have any questions, I'd be happy to help, but also probably best to talk to your lender. If you don't have a lender, I'd be happy to put you in touch with one. Have a great day.